This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. I can see this is not going in a good direction. That's all I can tell you. So my bet more likely is that we have a mid-March type of escalation around the end of Ramadan and options expiration. And I don't think Trump will soften. I think this is going to go through. So you've got plenty of time to kind of position after we have this bounce, which I also talked about in my write-up Monday. I see a bounce, then trounce. Remember that? I used that phrase, bounce, then trounce. So you've got time to position for puts and what have you, higher oil prices or the supply chain disruptions that can occur, which is basically a deflation shock to U.S. rates, higher bonds, and equities, low deflation shock to equities. U.S. dollar would likely bounce with VIX. So there's no remedy to this view that I see except for peace. And right now, we don't know what China's reaction would be as it relates to they receive the majority of their oil from Iran. And of course, Russia would have potentially an advantage to press in Ukraine. Anyway, big picture, don't forget to hedge. But the reason why I wrote this up is timing. Timing matters. I see a right tail green shoots occurring as of yesterday, which means, remember, these extremely oversold software as a service in particular, but application and infrastructure software plays that have been decimated with good reason, AI obsolescence fears and such, are very likely to bounce here. So I put this together. I used TRI, which is Thomson Reuters. If you recall, this was I went into some thinking going, hey, look at Thomson Reuters. It's right on monthly support, having a very strong bounce. I think these are puts monetizing. So this was the level I was looking for, 82.5, all the way from that kind of 2019-20 high pre-COVID, pre-QE. It's all the way back down. I used this as an example yesterday, but it's across the board. Anyway, I always stock my growth value ratio, and I think that is also setting up for bounce. But as I also profiled before in my Monday write-up, I can see sideways. So these sharp rallies, and then they're bold traps, boom, right back down. And that can go on for a few weeks, if not months. So ultimately, I'm still bearish mid-March to mid-May. I want to clarify that because there's been confusion, or maybe I haven't clarified that. I'm clarifying it with this post, okay? So, and I mentioned yesterday, it isn't just IGV bouncing. It's a much, much better support area right here on the 400 week. You know my obsession, unhealthy obsession with the 400 week EMA and the fact that IGV would be a much better bounce candidate at 71, but I'll give it that it did come down to the monthly. It broke the trend line, et cetera, et cetera. It's erased 2 years of gains, all of 2024, all of 2025. And I would not be surprised if it had a little bounce right here. So that's what I'm looking for, and I just wanted to set that up. I also grabbed, in addition to my kind of keep going to this growth value ratio, I want to remind, I said, protect the value plays. I think they can go sideways. Software can have a little bounce. I still think it'll be a bull trap. Volatility comes in later towards mid-March. That's what I see from the charts. So then I have to go find evidence. Iran escalation. Some are very worried about weekend risk next week, the holiday, etc. I still don't see it in the charts. I could be wrong, but I don't see it in the charts right now. I see this bounce, then trounce. Okay, so I'm trying to clarify. I grabbed this. Charlie McElligott of Nomura talks about how these basically cheap right tail calls, and that means oversold software. They've been selling calls, buying puts. Now, if that starts to reverse after this heavy deleveraging and degrossing of the Nasdaq plays, while they've been hedging, which bids up the VIX, we've seen this. This can be quickly unwound on select oversold issues. And by quickly, I mean those overwritten calls, you know how you sell calls and buy puts? They could be forced into this covering. So the puts start to bleed as the underlying bounces, and then they cover, and that adds more fuel. They cover the short, in essence, and the folks get stopped in on those sold calls. And I talked about this yesterday morning, and I wrote this up because I think it matters. It's good for chasers. If you are chasing or you have too close near duration hedges, you'll get some better pricing in a few days potentially this week and next week. I'll be monitoring that, but the point is this dispersion index that I showed you also, I took this from the 21st. It's a few days old, but we reached up into the October 1010 highs near the April lows where the dispersion of Nasdaq was so overbought or elevated compared to the dispersion of SPX that I thought it noted that it was a likely contender for coming back in. All right, there's my TRI poster child yesterday. I said, hey guys, this is the one to watch because this is going to be the put monetization. It's just too much too soon. We've already hit 94.14 and now we need to stabilize above this 92.35 because that's the 21 day. You can see it. It's still outsized. Now look at Netflix. Netflix may be tied to the Warner Brothers deal, but it's also perfect bounce. Look at this gorgeousness. I'm talking chases here. I'm not saying trend reversals. I'm not saying a multi-week to multi-month swing. I'm talking chases that could last a few days. Maybe we get lucky and it goes all the way up into and above this Keltner and 10-week EMA, which is about 85. Right now it's 80. Okay, that's a gorgeous chase. In my opinion, that's a gorgeous chase. But getting up there, I'm not going to get too cocky about it because I am still expecting volatility in mid-March. Does that help? All right, so Netflix is a perfect example. Here is your 200-week EMA. It stopped going down. It's stabilized. It's trying to get back above. I gave the 77.30 because that's monthly support. And then I can see this bouncing into 82.78, maybe 88, like we just talked about. Look at that 21 day before it got rejected. This time might be different because of the options market behind it. Now, do I expect this trend is going to just go all the way back up from 80 to 140? No, I don't. So if we get going, I can see it hitting its head on 90. That would be very, very hard to get and stay above, number one. And number two, I still have 70. Why? Look at the monthly. Look at this gorgeous monthly. So for me, this is just a bounce and then we hit, maybe it gets going beyond the 85. We go into this, we're going to call it 91. And then we even could overshoot to 95. But this is rolling over. Look at the monthly. It's so weak. So anyway, my point is the month will end for February in a few days, and we will see what this looks like. But this is still in a pronounced downtrend. It's going to be really tough to turn this up in a trend long. I can see it going to 85. I can see it potentially pushing higher into that 90-91 in some really good news spike type of activity. But big picture, this is still a broken trend. So I'm trying to give time frames here to set expectations, but that's what we got. Yeah, TRI was definitely the one that got me. I could see yesterday that we had just a lot of outperformance in software trying to come up off the ground. Here's that IGV off 78. Big picture, I think it's just a bounce, but it's what I got. All right, so Netflix is a chase du jour. It's just one of those. I don't know if it's also related to Warner Brothers reopening the door to Paramount, which would put Netflix deal in doubt, which would free up a lot of money to go back into Netflix. Right now, I see it more as this rotation from oversold software, getting a bid and puts monetizing and getting this whole unwind in play. Not enough right tail positioning in cheap calls, relatively speaking, and look at that beautiful advance. So this is what I'm talking about across the board. I don't care what the play is. You're going to have a sentiment shift when options start to drive. They are the tail. No, they're the flea on the tail of the dog. They can move that dog. So that's what options are doing right now. Netflix, I've been waiting for this guy, right? You know that. 200-week EMA stopped going down. We're playing a chase, just a chase time frame. Needed to hold above 77.30. Look on the weekly. It did perfectly. 77.30 is turning into 83, let's call it. 83 will turn into 85. 85 might have some headwinds. If it gets above 85, it's heading to 91. So that's going to take a little work, though. But 91 is your upside. Wicked cheap, out of the money. No one's looking at 90 right now. That's your overshoot target. I mentioned IGV. Here we go, baby. All right. So IGV just needs above that 79 to reach into AT40. Take it level by level. If you're looking for the money calls that look impossible at this point, the 86, 85 will be better. 83 and then 86. Yeah, let's 80-40 is first. Digest, get above 80-40. Then you've got 83. Can you see how this works? Yeah, then we get above 83, then we can head up potentially. But right now, let's into 87. That would be a wicked hard, like it would tap and then immediately throw up. In this backdrop of the TRIs of the world, of the Netflix of the world, look at those baby goes. Yeah. You are going to have to be quick or be dead when it comes to these chases. I'm serious about this because if you're used to trend or position trading, this is going to hit a wall of sellers that are happy to get out. All of these plays that are coming from oversold. That's why when I do trend trading, I almost always pick a stock that is all-time highs because it has no resistance, none. They call it blue skies for a reason. But for these oversold plays, they can take months of absorbing the sellers that are still miffed they bought at 120. So just remember that. It's a different game if you're a trend or position trader. But it's a fun one. It's a very profitable one if you know when stuff is going to rotate. QQQ is up 1.25%, which adds on to yesterday's 1%. So very strong right now, as expected in the chase world, in the chase time frame.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.